The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in. Welcome to the 5-Star Weekly Briefing, your pulse on the hospitality industry. It is the week ending February 6, 2026, and if you have been watching the wires this week, you know the market has suddenly woken up.
It really has.
We aren't just seeing one or two announcements. I mean, we are seeing a flood of capital moving into both luxury developments and, interestingly, high-volume pub assets.
It really does feel like the engine has finally caught a gear. For a long time, the sentiment was very much wait and see,
Right.
waiting for interest rates to stabilize, waiting for construction costs to level out. This week, the sentiment shifted noticeably to, move or miss out.
Exactly. We're seeing major institutional money flowing into regional areas and global brands doubling down on their tech stacks. Before we unpack why that is happening and where the money is going, we have to acknowledge the partners who power this briefing. This week's briefing is brought to you by VTech, the global leader in hospitality telecommunications, providing elegant, antibacterial guest room phones designed for the modern hotel environment.
And in a post-2020 world, that antibacterial feature isn't just a nice-to-have anymore. It's really a standard of care that guests actually look for.
Spot on. Let's get into the first segment, major openings and developments. The headline grabber this week has to be the Southern Highlands. Salter Brothers have officially taken the wrappers off Ardour Milton Park Barrel.
Monday, February 2nd was the official day, and this is a fascinating case study in rebranding. Salter Brothers took a historic estate, which, let's be honest, had great bones but needed a new soul, and put it through a multi-million-dollar transformation.
Yeah. It's a bold move. They launched with a very aggressive offer. Taittinger champagne, $100 credit, late checkout. But, looking past the marketing flash, what does the product actually look like? Because luxury in the Highlands is a crowded and competitive space.
It is. So differentiation is key. And they've introduced specific concepts to stand out. There's hors for fine dining, but the Polo Bar is the interesting one.
Oh.
It features a dedicated charcuterie room. It signals that they aren't just selling a bed, they are selling a social hub. They also have the Oliva Barrel Spa coming online soon. It's a total lifestyle package designed to keep the guests on property.
And this isn't a one-off for Salter, is it? I mean, this feels like the first domino in a specifically regional luxury strategy.
That's the key insight here. You don't launch a brand like Ardour just for one hotel. Throughout 2026, we're going to see them rolling this brand out to Spicer's Guest House in the Hunter Valley and Kingsford the Barossa in South Australia.
I see the logic. They are effectively building a kind of wine trail circuit. If you capture a high net worth guest in Barrel, you can cross-sell them to the Hunter and the Barossa.
It's an ecosystem play.
Well, yeah.
Precisely. They're capitalizing on the immersive retreat trend. Luxury travelers right now aren't just looking for a gold tap in the bathroom. They want a sense of place.
Right.
By targeting premier wine regions, Salter is baking that experience directly into the location. It's a smart way to capture the domestic luxury dollar that might otherwise head to Europe.
Okay, so moving from the country to the coast, we have news on Avani. They've flagged a debut in Wollongong for 2027. Now, Wollongong has historically been perceived as an industrial hub, but the hotel inventory hasn't really kept pace with its transition.
That's why this is significant. This is Avani's first purpose-built property in New South Wales. It's being developed by Black Property Group. Currently, it's slated for 107 rooms, but I've heard there is a proposal under review to push that to 140.
Which suggests they are bullish on the demand.
Absolutely. Wollongong is changing. This is a mixed-use development near the CBD and the beach. It's catering to that leisure market, business travelers who might tack on a weekend at the beach. It's a huge vote of confidence in Wollongong's economic pivot.
Speaking of confidence, the MGallery Collection is having a very busy February. They seem to be executing a kind of pincer movement on the premium market in two very different locations.
They are. They have the Elysium Noosa Resort fully opening this month. That's 175 rooms and villas right on Hastings Street, which is prime real estate.
Wow.
At the same time, the Brighton Hotel Sydney is completing its full opening. It's a design-led philosophy. They're betting that guests want personality, not just a cookie-cutter box.
So the Brighton targets that urban, sophisticated crowd, while Noosa captures the resort market.
Exactly.
And looking much further down the timeline, Radisson RED is planting a flag in Queenstown, but not until early 2028. That seems like a long lead time, even for a new build.
It is, but Queenstown is a high barrier to entry market. You have to get the planning and the logistics just right. This will be 221 rooms with a rooftop bar. which is non-negotiable in Queenstown if you want to capture the evening crowd.
Oh, of course.
It follows the success of Radisson Ready Auckland.
Yeah.
So it tells me that Radisson is really serious about an Asia-Pacific growth strategy. They aren't retreating, they are expanding their footprint in key leisure hubs.
Before we leave developments, we need to touch on a piece of infrastructure news. It sounds dry, I know, but the implications are massive. IHG Hotels has selected Oracle Opera Cloud as their property management system, or PMS, for the Americas and EMEA regions.
And for those outside the ops bubble, the PMS is the brain of the hotel.
It's everything.
It's everything. It handles everything from check-in to housekeeping status. And historically, big chains had these fragmented systems, different versions running on servers in the basement.
Which is a nightmare for data visibility.
Exactly. By standardizing on Oracle Opera Cloud across 236 countries, IHG is doing two things. One, they're giving franchisees a modern tool that doesn't require on-site server maintenance. But two, and this is the big one, they are unifying their data.
A single source of truth.
A single source of truth. You can't run advanced loyalty programs or AI analytics if your data is trapped in a basement server in Frankfurt and another in Chicago.
Yeah.
This creates that foundation.
That is the perfect segue into the money side of things. Let's move to segment 2, acquisitions and investments. If the development pipeline is busy, the transaction market is absolutely on fire.
On fire might be an understatement. We saw a level of liquidity this week that we haven't seen in probably, 18 months?
At least.
The headline story is obviously the public hospitality assets.
This was the portfolio marketed by HTL Property and Colliers for the receivers, McGrath Nicol. We knew these were premier assets, but the level of interest was just staggering.
The numbers paint the picture. Over 580 inquiries. And 46 first-round offers. We are talking about the South Bondi Hotel, the Diplomat in Potts Point, the Empire in Annandale, and Claridge House in Surrey Hills.
46 offers. That tells me there's a lot of capital sitting on the sidelines just waiting for the right asset class.
It validates the scarcity premium of Sydney hospitality. You simply cannot build a new pub in Surrey Hills or Bondi. The zoning, the licensing, it's almost impossible to replicate.
So if you want in, you have to buy.
You have to buy. And investors know these assets are recession resilient. People might cut back on luxury handbags, but they rarely stop going to the local pub.
So just to close the loop on that portfolio, the Exchange Hotel in Balmain is the only one that hasn't moved yet.
Correct. That is still with the receivers for the moment. But the fact that the other four were snapped up by independent buyer groups shows the depth of the market. It wasn't just one giant fund buying everything. It was broad-based demand.
Now, usually when we talk about hot markets, we talk about Sydney and Melbourne. But this week, the regional and inland markets arguably stole the show.
It's the regional renaissance we've been predicting. Look at the Delatite Hotel in Mansfield, Victoria. Dean and Gil Bell owned that for 13 years. They turned it into a genuine food and beverage destination, not just a watering hole. Selling that via HTL Property validates that regional assets can command premium multiples if the business model is right.
We saw a similar longevity story in Newtown with Culetto's. That sold after 42 years. 42 years.
That's an institution. It's been bought by a consortium linked to the Stonewall Hotel, and they plan to reposition it. It shows that even with a venue that has 4 decades of history, there is still value in coming in with fresh eyes and revitalizing the offering.
But the sale that really caught my eye regarding the inland trend was the Ashmont Inn in Wagga Wagga.
Wagga is a powerhouse right now. The Ashmont sold off market. It has a massive landholding, gaming entitlements, and development consent. This isn't just buying a pub, it's buying a land bank in a major growth corridor.
So investors are looking there because the yields are better than metro areas.
The yields are often better, and the cash flow is incredibly steady.
It's a similar story with the Hallam Hotel on the Murray River.
Sold to Ash Lyons. He's a smart operator who is deliberately building a regional footprint. It's a secure, tenanted investment. He's looking at the long-term demographic shifts towards these river towns.
And finally, capping off the transactions, we have the Metro Hotel in Bundaberg, Queensland.
Trading since 1874, it was bought by Peter Braithwaite, an interstate publican. When you see interstate money moving into a place like Bundaberg, it reinforces that the pub market is a national story.
Right.
The momentum from 2025 has absolutely carried over into 2026. Capital is agnostic right now. It will go wherever the quality assets are, whether that's Surrey Hills or Bundaberg.
It's fascinating to see such confidence across both metro and regional markets simultaneously. Let's shift gears to segment 3, market trends. We have a milestone for a brand that essentially defined modern luxury. Four Seasons is celebrating its 65th anniversary.
65 years. But they are not resting on their laurels. They have a pipeline of about 60 projects. What's interesting, though, is how they are defining growth.
It's not just about opening more hotel rooms, is it? They seem to be pivoting towards earning the entire travel lifestyle.
Exactly. They call it experiential travel. They're pushing hard into branded residences, which is a huge revenue driver, but they are also expanding the Four Seasons yachts and the private jet experience.
So the strategy is to increase the share of wallet of their existing loyal customers.
That's it. If you love Four Seasons, they want to fly you, sail you, and house you.
It's disciplined growth. They aren't diluting the brand. They're deepening it. Now, switching from luxury jets to cricket bats, we finally have the hard numbers on the economic impact of the Ashes tour.
We do. CoStar released the data, and it confirms what every hotelier in a host city already knew. The Ashes is a gold mine. We saw favorable results across Perth, Adelaide, Brisbane, Melbourne, and Sydney.
I was looking at the Perth numbers. 96% occupancy. That is effectively a sold-out city.
It is. And Adelaide saw significant year-on-year growth as well. It's a powerful reminder of the relationship between major events and RevPAR, revenue per available room.
Right.
When a major sporting circus comes to town, it doesn't just fill rooms, it allows hotels to drive rate. The compression effect lifts the entire city's performance.
Let's move to segment 4, Stars in Motion. This is our rapid-fire update on who is going where. It's crucial to track this talent because where the leaders go, the strategy follows.
Absolutely. A lot of movement this week.
Yeah.
First up, Winston Angus has started a new position as hotel manager at Hilton.
Okay, and Marcus Hanna has taken on a significant strategic role, new head of hotels, hospitality, and leisure at Mulpha International.
Christy Rundle is the new cluster operations manager at Accor. Those cluster roles are becoming so vital for operational efficiency.
Andrew McKenna has started as regional GM at Alloggio Group.
Adi Medina has been appointed marketing manager at Moxie Sydney Airport, a very dynamic brand to be working with.
And Thomas Sin is the new GM at Treehouse Hotels. Congratulations to everyone on the new appointments.
It's great to see that kind of mobility and energy in the leadership ranks.
Finally, let's wrap up with segment 5, Tech News. This brings us back to our roots at Technology for Hotels. The topic is AI, but I feel like the conversation has shifted. In 2024, it was all hype. In 2026, it feels like it's about utility.
That's the consensus. 2024 and 2025 were the building years. We were figuring out what this stuff could do. Now in 2026, the tools are hitting the ground. We are seeing AI accelerating in forecasting, operational planning, and travel search.
The travel search aspect is fascinating. It's reshaping the guest experience before they even book.
It is. AI-powered search tools are changing discovery. Guests aren't just typing keywords, they are having conversations with AI agents. If your online content isn't accurate, engaging, and structured for these bots, the AI won't find you.
You become invisible.
Completely invisible. And on the property side, we are seeing robotics gaining real traction.
Particularly in housekeeping and delivery.
Exactly. It's purely about efficiency. The forecast is that by the end of 2026, we will see meaningful gains in revenue management and operational efficiency driven by these tools. It's being described as a sustained transformation.
Yeah.
It's not a sudden disruption anymore. It's just becoming part of the furniture.
Like the PMS we talked about earlier.
Exactly.
And that connects it perfectly back to the IHG and Oracle story. You can have all the fancy AI tools you want, but if your data infrastructure is a mess, the AI is useless.
Precisely. You can't run advanced algorithms on a fragmented legacy system. The cloud migration enables the AI adoption. It's not the sexy part of tech, but it is the foundation.
Well, that covers the board. From champagne launches in the Southern Highlands to robots roaming the hallways, it's been a massive week. That wraps up this week's 5-Star Weekly Briefing. Thanks for tuning in and staying informed with the latest in the hotel industry. Don't forget to check out our 5-Star Conversations podcast, where Brendan Granger from Technology for Hotels sits down with the industry's most influential leaders to uncover their journeys, insights, and the future of hospitality. Until next time, stay well and stay ahead. See you next week.
Thanks to VTech for keeping guests connected with reliable, high-performance in-room technology.